Morning, welcome to Ainsley News. It's Thursday, the 28th of January, inching ever closer to February. Today we're talking the Wile Coyote moment and how close that could really be. Maybe one of the best visual analogies you will see around current financial markets came via Raoul Pal, recently writing for GMI's Macro Insiders, talking to roadrunners, infamous Coyote, running off the cliff, legs still spinning. Here's that classic image there. Risk on is the current trade, made with reckless abandonment, legs are spinning with no fundamental support beneath it. Pal writes to the escalation of COVID at a rate that will make things much more worse before any benefit of vaccines can impact it, and more particularly the serious economic impact this will have. Just yesterday we saw figures of 100,000 deaths in the UK, 2 million worldwide, and 100 million cases worldwide. GMI models, excellent to date, are forecasting 200 million cases by the end of April and 4 million deaths. Such is the exponential nature of this virus. Whether you believe in it or not doesn't matter. The economic impact on the government responses is what we're going to talk to today. So this from Pal. There will be no choice but for Biden to try and impose much stricter measures in the US and force as much of the country as possible into lockdown. He fought the election on this, and it needs to buy time for the vaccine to be rolled out, or the virus will accelerate with the new UK strain. In case you didn't get what I'm saying, or you just didn't listen too much, let's reiterate that here. Our estimates show that in the next 3 months, the world is probably going to double the number of deaths from COVID accumulated during the entire last 12 months. That's right, doubling what we've already got in the last 12 months in the next 3. Out of respect to our subscribers, we will look up just 2 of the key indicators he is seeing as signs of a major correction or crash coming up. First, the chart of truth, as he calls the 10-year Treasury yields, has clearly not bottomed in the regression channel, which it does in every cycle after a top. That tells us rates are headed to zero, and of course real rates even more negative. So whilst we have been seeing yields rising on this risk-on market, history and the smartest market, the bond market, is telling us this won't last. Here's that chart here. However, even the guy who made that amazing bond market call in the last cycle and calls them the financial truth is more concerned by one thing. And this is it here. But the thing that really worries me is not the bond market, but the equity market, which is now in clear bubble territory. Euphoria is hitting all-time high records. Here's that euphoria versus panic chart here. That is literally off the charts. What is clear, however, that even one of the greatest minds like Pal can't pick the top. He is torn between a further final surge when comparing to 1987 and an imminent crash. The following chart we're going to show you compares now to the behavior just before the 1987 crash. So all in are markets that we have mutual funds carrying the lowest level of cash in all of history. And not surprising, margin debt is at all-time highs. Here's that S&P 500 and margin debt 8-month percentage change, just to show that comparison there. I'm getting very concerned that the stock and bond market are about to have a Wile Coyote moment, where the market reverses the positions rapidly. I'm not sure if the big move comes yet or in a few weeks, but it feels like it's coming. The 1987 parallel suggests it might come after a new push higher. I just don't know. So what does all this mean for markets and gold? Well, the Fed step into print, and the government steps up the urgency of massive fiscal stimulus. Bond yields will fall in that scenario. It's low growth plus Fed buying, and the Fed will likely pin them lower with yield curve control. That much printing will cause gold to rise again. Falling bond yields help massively, of course. Gold is in a channel, which I expect to break to the upside in due course. Here's that graphic showing the channel that gold's been in just here. And a new high in gold would be a massive break of the largest bullish cup and handle pattern in gold's history. And that could create a mega trend for gold. Here's that cup and handle graph here. In conclusion, he writes, remember, if I'm right and we have another deflation and growth scare, the answer is more printing and BTC and gold go up. If I'm wrong and we have inflation, the outcome will be BTC and gold rising. But overall, I think the deflation scare is more powerful, even if gold and BTC get hit in a liquidation for a short period. Investors know that the outcome for a liquidation event is much higher gold prices in gold and BTC, and with institutions on the bid, the chances of a sharp hit like in March is much, much lower than people realize. To clarify his last point, in March last year we saw gold, silver, Bitcoin, indeed everything bar the USD, get liquidated, as the surprise and unknown event of COVID saw essentially all markets crash as everyone went to cash in fear. Simplistically, COVID was an unknown unknown. This next event is most certainly a known unknown, and indeed arguably a known known with unknown timing. Any broad liquidation event hitting precious metals and crypto will likely be very short-lived, as the big money will go to gold, silver, and Bitcoin quickly in the knowledge of what the implications are, which we've spelt out today. Whilst blind Freddy can see this setup, markets have a habit of being willfully blind on a narrative of this time it's different. But it never is. Read into it as you want, but the last night, two better minds out there tweeted the warning signs below. This is from Raoul Pal. A bit early to tell, but something feels very risky about the markets. How bonds are trading, how the dollar is trading, gold, BTC, and what's been going on in equities. On alert for a market clearing event. Equities are probably the weakest point. And this is from Mike Novogratz. I have the same feeling. The old correlated risk unwind can get ugly. Indeed. Some good insight there from Raoul and Mike. Well, that's news for today. AinsleyBullion.com.au for all things physical, AinsleyWealth.com.au for all things cryptocurrency, and GoldSilverStandard.com for our own cryptocurrency built and backed by real gold and silver. We'll catch you tomorrow for end of week news. Enjoy your day.